Jim Antos, head of Asia ex-Japan Banks Research at Mizuho Securities, joining us this morning. Jim, why are you so bearish?
Well, I think, we've got to be realistic. I mean, what Zeb just said was absolutely right. Over a 5-year span of time, the Chinese banks have been just about the best banks on this earth. But if you're an investor, you want to make your money in less than 5 years. You want to make your money in 6 to 12 months. And sentiment is working against you.
Who says you have to make money in 6 to 12 months? What about long-only funds? Don't they hold stocks for about 3 years or 2 to 3 years at least? All right, so tell me, what's going to happen in the next 6 to 12 months? Are we going to see declines here, Jim?
I think this is what the problem is, At least the problem is now you better be, I think you better be ultra defensive. You want to make sure you preserve your capital because, the headwinds globally and internally in China are kind of strong.
Right.
Internally, well, inflation. Is it really tamed? We're above 6%.
Right.
I think, until that really convinces the market, the bank stocks don't have much chance to move up.
Okay, and we saw that triple R hike, or in essence of the triple R hike, it was worded differently.
Yes.
That was pretty much what it was. Okay, so what does that mean? That means earnings are going to disappoint in the next few quarters?
No, I don't think so, as a matter of fact. We've had great earnings. In fact, for the second quarter and the first quarter this year, I know the market's not trading on earnings, Susan. That's the problem.
What are you talking about, Jim? Okay, go ahead.
No, but the market's not trading on earnings, and that's the problem. What I'm saying is we've got a market driven by fear, not greed. And yet an investor really needs to be greedy. And the issue here now is we've got about the 30 to 50% increase in earnings year on year for the first half. In the second half, we're going to have something like that. There's nothing wrong in terms of earnings story in China, but the market hasn't traded on earnings. It's been very disappointing. You've lost 20% of your money in the last 3 months on Chinese banks.
Okay, well, Bank of America made about 74% before they sold off. I want to ask you about China Construction Bank. It really puzzled me, and maybe you can explain to the viewer, how can CCB shares go up both in America and Hong Kong and Shanghai trade when it was sold at an 11% discount?
Again, it's all about sentiment. And the market, investors thought, oh, gee, there's an uncertainty here. What happens when Bank of America sells their 10% stake, 10.2%, they sold 5%.
Reportedly buys it, right?
Yeah, you don't know what price is going to be. Actually, it was 11% discount, but the market is relieved that this is now cleared. Actually, overreaction by the market. Okay, overreaction by the market. So what about earnings season so far? Have there been any surprises for you? Actually, yeah. I mean, Agricultural Bank, of course, they had to pre-announce this, but they had a 45% increase in the first half profits compared to last year. I mean, it's a little like an elephant winning the 60-yard dash. ABC is one of the world's largest banks, and yet look at that. They have the profit growth of a much smaller institution. It's amazing. Okay. Now, you have hold ratings across the board, really, for all these Chinese names. What I'm really saying is that's an honest hold. What I'm saying is if you own some core banks like Agricultural Bank, CCB, and ICBC, don't sell those shares. You'll be very unhappy if you do. Right. Don't buy either. On the other hand, this is the wrong time. Let's let that sentiment continue to let the shares drop. There will be a time, I hope in the next couple of months, that you will buy. Okay, what about these debt levels? Let's finish it off with, I guess, these crash theories out there that we have so much hugely leveraged municipalities, these off-balance sheet vehicles. Is that going to, say, crash the economy and the banks? Not very soon. I think this is what the problem is. It's like, I can do a model and I can have any kind of disaster scenario. Unfortunately, having been a commercial banker for 20 years, I don't think credit works that way. The meltdown is not happening this year. It's not happening next year. All right, Jim. Thanks for joining us this morning, even though you are the most bearish, but maybe a cup of coffee will help you out. Jim Antos of Mizuho Securities.